Hey everybody, Lance here. I'm going to go over Trading in the Zone, Chapter 10. First, characteristics of a belief. There are three basic characteristics you need to understand to effectively install the five fundamental truths about trading. One, beliefs seem to take on a life of their own and therefore resist any force that would alter their present form. Two, all active beliefs demand expression. And three, beliefs keep on working regardless of whether or not we're consciously aware of their existence in our mental environment. A few things about beliefs is once you are having a habit where you consistently do something over and over again, it starts to tie into your beliefs, and there's a lot of research showing that. The easiest and most effective way to work with our beliefs is to gently render them inactive or non-functional by drawing the energy out of them. I call this process deactivation. So to deactivate means to turn off. If we are trying to render them inactive or non-functional, if you have bad habits and beliefs, you draw the energy out of them. Okay? And the rest of the chapter talks a little bit about that. To illustrate the point, let's return to the example of the dog. So in the previous chapters, they talked about a dog that bites you. If that happens the next time you see a random dog, you'll probably have a preconceived notion that it's going to hurt you. That's not necessarily true because the next dog could personally be happy and very friendly, right? Recall a boy had several painful experiences with dogs. The first experience was real from the environment's perspective. The others, however, were the results of how his mind processed information, based on the operation of the association and pain avoidance mechanisms. The end result is he experiences fear every time he encounters a dog. However, the larger issue is, how can the boy deactivate the all-in belief that dogs are dangerous? And one of the ways to do that is to have a trading plan in place and consistently do it. If you're dealing with an actual dog example, you might need something like therapy in order to make that work, though. Early in the process, the new realization about dogs might be strong enough only to allow them to be the presence of a dog at a distance and not run away. However, each encounter of a dog, even at a distance, that doesn't result in a negative outcome will draw more and more of the negative energy out of his belief that all dogs are dangerous. Eventually, each new positive experience will allow him to close the gap between himself and a dog little by little to the point where he actually touch one. Say you have a trading plan in place where there's a positive expectancy and you have a few losing trades, you have a few winning trades, but over time, if you're taking the trades enough, you're going to notice the positive expectancy come out, and then every time you do that, it's going to deactivate those beliefs you have on a loss. In light of what you know, what now understand about the nature of beliefs, if you're still experiencing negative states of mind when you trade, you can assume there's a conflict between what you know about probable outcomes and any number of other beliefs in your mental environment that are arguing or demanding expression for something else. Keep in mind that all active beliefs demand expression, even if you don't want them to. So think in probabilities. You have to believe every moment in the market is unique, or more specifically, that every edge has a unique outcome. That's why when you're taking a trade, and you'll see in the last chapter a method for actually taking in your trades to de-escalate beliefs, knowing that every edge has a unique outcome is perfectly fine as long as you are staying consistent with your, say, take profits and stop losses and sizing of your trades. When you truly believe what you don't need to know, you'll be thinking in probabilities, the market's perspective, and will have no reason to block, discount, distort, deny, or attack anything the market is offering about its potential to move in any particular direction. Key part is you truly believe that you don't need to know. You'll be thinking probabilities. There's no way to know what's going to happen in the future. You don't have your DeLorean time machine showing what's going to happen when you bet on the Sports Almanac and Back to the Future Part 2. But if you're just okay in thinking in probabilities, it really doesn't matter much about any in particular outcome. Look at the discussion questions. How do our How do our core beliefs about success, failure, and risk influence the way we interpret market information and make trading decisions? You want to have core beliefs about thinking in probabilities, knowing that you have an edge in place, taking that edge when it comes up with a long-term mindset. 2. Douglas says beliefs act as energy that shapes our perception of reality. How does this idea apply to how traders see opportunities or threats in the market? So you could have positive or negative energy just in anything in life. Positive energy when good things happen, negative when bad things happen. And if you reflect and overthink this stuff, it will continue to happen. Even if, say, you have a lot of negative stuff happening, it may think the next thing's going to be negative when it's not necessarily true. This works as well in the market. If you had a few losing trades, you might have that negative energy, and then you think the next trade is going to lose as well, but that's not necessarily true either. Why is it difficult for traders to let go of limiting beliefs, even when those beliefs consistently lead to losses or frustrations? You could have limiting beliefs when you're not thinking that a certain strategy will work in a small sample size, and you're not getting the long-term historical results on something. So that could be a limiting belief that you think is going to continue that way. Next, what steps can a trader take to identify and replace a belief that's sabotaging their trading performance? One is not really mull or reflect too much on a loss. If you lose and you have perfectly good account sizes in other accounts and whatnot, then having one loss, if you're sized correctly, really isn't a big deal in the end. Making sure that you're actually following your plan, the amount of size that you're putting in, the take profits, the stop losses. As long as you're covering those consistently, it could help replace beliefs that are negative. And Douglas argues that beliefs are not necessarily true or false, only useful or not useful. How does adopting this mindset change how a trader approaches learning and adapting to the market? So beliefs are going to be in your mind, and you just want to think, do you have a useful belief? Do you believe that the trade that you're taking with an edge will work over long periods of time? Or are you thinking that the trade that you take will be a net loss over time? Those are some of the beliefs that you could have that could be useful or non-useful. If you believe that you have an edge in place and you're taking that trade over and over again, knowing what the long-term outcome is going to work out, that could be a useful belief. If you think that your edge suddenly fails and you stop doing it, or you size differently, that could be not useful. All right, so that's chapter 10. Last chapter is coming up. Probably the most important chapter in the book, and it gives you applicable system for taking trades that help with your beliefs and thinking in probabilities. Have a good one, guys.